Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for March 25th, 2018. I hope you guys are having a great weekend, and before we get into today's analysis and what had happened last week, what's happening this next week, I got a few announcements. On Monday, make sure you guys listen into the FACE webinar. If you guys entered the contest that we had about all the closing prices for the major markets on Friday. Well, I mean, the contest had been announced for the last couple of weeks. We're going to be announcing the winners on Monday. So, you know, we have first, second, and third place winners getting subscriptions to ForexAnalytix. First place winner gets, I think, 6 months. And then the top 10 are going to get a nice little ForexAnalytix gift set, I guess you can call it, with a t-shirt and mug and mouse pad and all that fun stuff. So in order to register to our FACE webinar, and it is free every single trading day, you just click on this little button right here in the middle of our website. It says register for free, and then and listen in, and you get great analysis, because I come in every morning, you know, not just from me but from the team. I'm talking about analysis, but I come in the morning and spend about 30 minutes with you guys, just kind of telling you how I'm feeling for the day and what I'm looking for. But we have a lot of great interviews that also come in every single day. Now, speaking of which, on Friday, it's Good Friday. I know we have a holiday and it's observed a lot of places around the world. Stock market's going to be closed, but we're still going to have a webinar because we're bringing in a special guest, a friend of mine who I've traded with for over a decade in the same chat room. I've met his wife. I know his family. It's a very inspirational story, probably the most inspirational story you'll ever hear about as a trader. My friend Amir Dullah Shahi, who lives now he lives in Georgia. He'll be joining us on Friday. You guys cannot miss this interview. We will be posting it on YouTube, but if you can listen live and ask him questions, highly recommend it. He has gone through some very big, without giving away the story, just some really major events that for a lot of people could have been absolutely earth-shattering, life. Well, was life-changing, but he could have really buckled as a human being, and he has persevered, and he has come storming back as a trader, and it is the most, like I said, I don't want to take it away from him, so just listen in on Friday. It's the most inspirational trader story I think any of you will ever hear in your lifetime. You guys got to listen in. So that's going to be this Friday, Good Friday, so make sure you're listening in the FACE webinar. Okay, with that being said, you know, we're gonna talk about this next week. Now, if you guys haven't signed up, taken your trial, it's only $1 for 10 days, so do it right here. Click on the button. Once you do that, download the mobile app and all that fun stuff, so you can get all of our updates on the fly as you're grocery shopping or trading, or, you know, taking kids to soccer practice or whatever you might be doing. But make sure you do that. Okay, now let's talk about what's happening this next week. So this next week is a shortened week as far as we look at it from a volatility standpoint. Volatility is really going to be here Monday, or, you know, Sunday afternoon all the way till Thursday, because of Good Friday. Volumes or volatility should really thin out, but it is going to be a chock full week of mostly GDP data. We have GDP in the US, we have GDP we have final GDP on Wednesday, we have GDP in Great Britain, we have GDP also in, I want to say Canada. Yes, Canada on Thursday. Now we also have a lot of Fed governors are speaking, especially we got to kind of listen up to what all these Fed governors are speaking, even the non-voting members, because we have a new Fed chair with a whole new voting panel. So you want to listen into what they have to say this week, and there's a lot of them that are speaking. Also on Monday morning, early morning, German Bundesbank President Weidmann is speaking, and Weidmann is also I believe he's the candidate to be up, a German candidate to be up for the ECB president seat as well, to take over Mario Draghi. So always worth listening to and seeing what he has to say about the Eurozone. But there's going to be a lot of data, economic data, throughout the course of the week. We have some inflation data at the end of the week on Thursday with PCE, personal spending, and incomes that are coming in here in the U.S. that are also going to be closely watched. But this week is really, really important as far as, and we have to really pay attention to what's happening with equities. Now, before I get into equities, and I'm going to talk about them here in a moment, I want you to look at the ForexAnalytix, the traffic light page. Now, the traffic light page is a really unique tool, in my opinion, because you can see all these instruments that we cover, and you see different type of analysis, and where that analysis is basically slanted as far as bias goes. Whether it's bearish, being a red dot, or green being bullish, or orange or yellow being kind of a neutral bias. So you can kind of look around at these different instruments and realize that a lot of them have mixed signals. And I'll be the first one to admit, the currency market is not easy right now as far as a bias goes and analysis goes. I mean, you look at the euro dollar and what we've been doing just the last few weeks. We're consolidating. Very strong uptrend, and in my opinion, very key resistance coming in at 124. And despite how you feel about the euro, or can the euro continue to extend to its gains based on how long the market is, I don't know if it's such a euro dollar story or if it's more a dollar story. And the dollar gives us a pretty clean picture, which I'll talk about here in a moment. I'm actually going to give you my own views of the dollar from that standpoint. But if you take a look around at, let's just say the Aussie dollar, you'll notice that the macro bias is neutral right now, but the candlestick, basic technical analysis, harmonic analysis, Elliott wave analysis, it's bearish across the board. Now, as you guys are very well aware of, the trade war that is brewing, or arguably starting right now, between the US and China, one of the bigger losers in this battle is going to be the Australian currency and Australia economy. In my opinion, it's going to really put some pressure on the Antipodean, Aussie and New Zealand currencies, and we're at risk, in my opinion, of breaking lower in the Aussie dollar, just from a risk standpoint too. If you look at what's happening in the major market averages, they're under a lot of pressure, which I'm going to go into in just a few minutes. But you can see here in the Aussie dollar how important the 76-cent level is going to be as we start approaching these channel lows, because if that breaks down, it's probably a good signal that risk appetite is waning across the board in the global indices as well. And I look at currencies like the Canadian and the dollar Canadian as well. I've been pretty adamant about playing the Canadian currency long when we were at the 131 level. I think most of, especially if you listen in the free webinar, on our daily webinar, that I've been bearish the dollar Canadian since we were at 131 and played it pretty aggressively to the short side personally. We broke through channel support and we came in and tested some support. But if the market takes this risk off tone, we might get a little bit of a reversal in the Canadian currency back up again. We might see it bounce from these levels. And I know, like myself, I really want to sell, or excuse me, I want to buy the Canadian because of the NAFTA agreement that inevitably is going to happen, in my opinion, here in the U.S. and Canada, and between U.S. Canada and Mexico, which is ultimately going to benefit the Canadian dollar. But near term, if we do have some risk-off activity in the indices globally, the Canadian currency might get sold. So I'm a little bit more hesitant. It was an easy trade, I should say. It was an easy trade for me to take a short dollar Canadian at 131 and ride it lower last week, or the week, week before last as well. But it's not as clear of a picture today. As much as I want to be long the Canadian dollar moving forward, near term, we could actually see some Canadian dollar weakness if we see that risk off activity, as the Australian dollar might come under pressure. Commodity currencies and emerging market currencies tend to come under pressure if there's a lot of risk off, or when I say risk off, for those of you that are not familiar with the term, that basically means that people are selling stocks and they look to buy the dollar as more of a safe haven type of currency. And during risk off environment, when stocks are coming down, not all dollar currencies are created equal. The dollar may be bought against the Aussie, the New Zealand dollar, the peso, the lira, the Canadian. We may be buying the dollar against some of those, emerging market or commodity type of currencies, but the dollar may not be. It may be sold if you're talking about maybe some European currencies. So it gets a little bit convoluted during periods of risk off, if you will. So you have to be careful with the Canadian. What I'm trying to tell you here is it's not as clear as it was 2 weeks ago. Now let's take a look at, and I'm going to give you my own view. I told you I'm going to give you my own view of the dollar index, and I want to do that because the dollar index is bearish by every stretch of the means, as far as I can see. Now, if you look at the dollar index, and this is the Dixie, we've been under pressure since basically since the election, and inauguration day, the dollar index turned and it's been heading lower ever since. And here at inauguration day of the Trump administration, Donald Trump, we have a bear flag pattern technically, and we have, matter of fact, we have two bear flag patterns now, and that's something that I think we all have to pay attention to from a technical perspective. You can see the first one in teal, which is the longer term. We're kind of halfway through that last leg, if you will, but you notice the inside, and it's notated in blue. The lines are in blue. We have another bear flag forming inside of a bear flag. So the dollar index itself, and you can see it here. I'm going to give you a little bit better view here. It all points to about 84 or 84.50 in the dollar index, and we're trading at 89. If you think about that from a risk reward perspective, just where we're at, and for me, I always think about, all right, what's my risk and what's my potential gain? Well, the risk here is, as long as we stay below 91, and you can see that dotted line right here, technically, as long as we stay below 91, we're bearish. That's the downsloping trend line. You can see it's kept us captivated all of 2017. Okay, so if we stay below that, it's bearish, and we're currently trading at 89. So you're saying, okay, well, or we're at 89.50 actually. You're saying, okay, well, I'm risking $1.50, right? Well, what's my gain here? Well, if we drop from 89.50 and we go to potentially, let's just call it 84.50, well, that's $4. So you're risking $1.50 to make $4. The risk reward technically still favors dollar shorts. Now, like I said, the dollar is not necessarily created equal in all of these currency pairs. So when you're looking at the euro, you might go, okay, well, the euro might be able to blast up towards 130, where the Aussie dollar might actually end up going down. Then you have to start looking at cross rates like the euro Aussie, for example, that could really explode higher, which ultimately it could, right? If you start looking at where that thing can go. So I think there's a lot of opportunities should the overall markets feel some pressure and we see some risk off, where the dollar is bid against certain currencies and it's offered against others. So there could be a lot of cross rate effect, cross rate opportunities with the different cross rate effect. And there could be obviously some dollar opportunities as well, and maybe even some yen opportunities, because if you look at the dollar yen is obviously has broken out of this triangle multi-year, and even though we have a divergent relative strength, it looks like it's going a lot lower over time. So there are a lot of opportunities. It's just not as clear if you're looking at the dollar index itself. Now, I did want to take you into the S&P, and I want to take you into some of the other averages, because we have been talking about them for the last couple of weeks. And the S&P in particular is of great importance right now, because we have stopped on Friday at the 200-day moving average. And well, most of you should know that we stopped at the 200-day moving average multiple times. Now, that poses an issue Sunday when the futures market opens up. How much downside do we have here at the beginning of the week? I would venture to guess that we do bounce, Sunday, Monday, Tuesday, early in the week before we make another stab at this 200-day moving average. That would be my assumption. However, if the stock market says, we're going to go ahead and plow right through that 200-day moving average and start targeting these lows, I think if we start hitting new lows, it's going to be very tough to stop the downside momentum in the market. Now, it's not just the S&P that's got the problem here. Look at the Dow. The Dow is almost at the 200-day moving average, and we're almost near trend lows. We were where we were at, a couple of months back, or a month and a half ago back at those lows. And you guys know that we had that triangle. We broke out of the triangle. Risk appetite is really quite ugly. Look at the NASDAQ 100. We've completed a flag pattern on the way down. We're at 127% extension. But, and I know I've talked about this, that the NASDAQ was a really key reversal at the 161% extension a couple of weeks ago. And I hope some of you guys took advantage of it, as we talked about it here on the week ahead video a couple weeks ago. And I think most of you probably remember it, and if you didn't, go back and listen to the videos from 2 and 3 weeks ago on these week ahead videos, and go reference what I was saying about stocks. So it's going to be a very important open on Sunday. Watch the dollar and how we respond here in the yen, and if stocks continue to break lower, especially tomorrow. Like if we close tomorrow, I say tomorrow as being Monday, because I am filming this on a Sunday morning. If Monday afternoon, Monday evening, we close lower and we break through Friday's lows and we close down there and we close below the 200-day moving average, that's going to really shape how I trade the remainder of the week. Go back and reference what I said earlier about emerging market currencies, commodity currencies, and the euro and some of those cross rates, because I think the dollar will perform better against some currencies and it's going to perform worse against others, and you can take advantage of it several different ways going into next week. But if we bounce, which I think is likely, I think what's more likely is we're gonna end up bouncing Sunday, Monday, and then towards the end of the week we'll probably sell off again. Remember, this trade war that's being talked about and is starting, we're at the tip of the iceberg here. We really are, and this is just the beginning stages of it. So you have to be careful about buying risk. I'm more of an advocate at this point in time in selling rallies in risk. That doesn't necessarily mean I'm going to short the stock market, or I'm going to play the stock market long then short it. I tend to take my trades through currency proxies, meaning I trade currencies in response to what's happening in equities. So if the stock market does break down, there are certain actions that I'm going to take as a trader in currencies, like buying yen and selling commodity currencies, selling emerging market currencies. Or if risk appetite bounces, I might be buying the Aussie dollar, or buying the Canadian dollar would be probably my weapon of choice. So I'm really tailoring my trades based off what's happening in equities. And also, I guess I should mention one last thing I should mention before I let you guys go, because this has been a long video already, is take a look at the bond market. The bond market stopped at a 50% retracement on a weekly basis, and the bond market is starting to show some signs of life down here, and you can see it in relative strength. And if the bond market starts to bounce, that's another signal that risk off is coming. And then I probably could stretch this video out another 10 minutes and talk about precious metals, but just watch gold and silver. They look like they could stage some more rallies. Anyway, guys and gals, I know this was an extra long video. I hope you guys have a great trading week next week. Make sure you listen in to the week ahead video, excuse me, the face webinars. And if you love this video, make sure you click the like button, subscribe to our YouTube channel, and that just encourages us to continue to do these each and every week for you guys for free. You guys have a great trading week. My name is Blake Morrow with ForexAnalytix.